Alright guys, welcome back to the channel. So today is episode 101 and I've been getting a lot of requests on Instagram, people asking me, can you do a video about how to trade options? So we're going to go ahead and pretty much do like a short video. It's really going to be like an introduction to trading options on Robinhood for beginners. So the first thing we want to start with obviously is the charts. Um, this is not going to be an in-depth video about the charts, but I will pretty much just show you different levels that I have set up right now. So as you guys can see, we have SPY pulled up on the chart, and we have a couple of different levels here. So this first level, if we go ahead and click on it and look on the right, you'll see that this is pretty much like the 520 level. So that's when SPY's at 520, and today it's been consolidating a lot on this level. Now the next level up, it's going to be 521. All right. So right now, when the market closed today, SPY was around like 520 and change. All right. So we're going to go ahead and look at purchasing a call, anticipating that it will move from here to this level, right? And then potentially, if it breaks this level, then it will go to the next level here, which is going to be like 522. So we're going to go ahead and hop into Robinhood, and we're going to take a look at a couple of different options. We'll go over some of the main numbers, the Greeks. We will also go over the volume and interest. Pretty much the things that are important. There's a whole bunch of different numbers, but these basic numbers will get you a head start. All right, so let's get into it. All right, so here we have Robinhood pulled up, and we do have SPY loaded up here, ticker symbol SPY. The current price is 520.70. All right. Now, if we go ahead and we go down here to the right, you're going to see a button that says trade options. And we go ahead and click on that, and it's going to provide the different options that we have available to us. Now, this line here indicates the current share price. So anything here or here is going to be considered in the money. So the in the money options are options that are close to the actual underlying asset price right now. And as you see, the price right now is 520.70. So this one is going to be really close. This one is close, but not so close. All right. So if we go ahead now, and let's say we go ahead and click on this first option here, we'll see that the strike price is 520, right? So we're looking to purchase this option. We're going to go ahead and just click on it. And when you click on it, if you scroll down, it'll come up with some basic numbers here for you. All right. So this is telling you this is the SPY 520 call, right? The expiration date is going to be 5/14, which would be today. So this is an option that expires today. Gives you the bid and the ask, as well as the mark, the high, the volume. This is what I want you to pay attention to. You want to pay attention to the volume. The more volume it has, the greater your chances of your option being executed when you purchase. Open interest when you sell. This is also something that you want to pay attention to. Now, me particularly, I like to get options where the volume is at least 4 digits. So I want like something like at least 1,000 in terms of volume, and I want the same on open interest. So this has a whole lot of volume. It has 26,000. So this right here meets my criteria. Open interest also meets my criteria. And the next thing I look at is the Greeks. All right, so the Greek on this is 0.60, 0.60, which means for every dollar that the option moves, you're going to get 60 cents. All right, so you're getting 60 cents for every dollar that it moves. Obviously, this is multiplied by 100, so you can figure it out from there. Then we have gamma. This is not so important. Theta is the next one. So I'm trying to keep it really simple. Like I said, this video is for beginners. Theta is what you want to pay attention to. So theta is time decay. All right. So the longer you hold the option, the more it decays. And this option expires the same day. So as you can see, the theta is negative $1.04. way more than what the delta is. So what this means is if you jump into this option and it starts to consolidate, and if you guys are like, what's consolidation? Let me show you that real quickly. So consolidation is this, guys, where it's just moving up and down, up and down. It's not really breaking any kind of levels. And this is, it seems short, but this is a really long time frame. All right. So that theta will eat into your profits as it just consolidates. It's not really going anywhere. It goes here, comes back down, goes back up, goes back down. It's not really going anywhere. It's just consolidating versus say like here where you see it goes up, breaks, boom, shoots up, and then obviously you see it comes back down. So this is what consolidation is. All right. And as you guys know, that's something that you want to stay away from. So if we go back to our option, if you're choosing this option and you have a breakout, this is good news because the delta pays well. But like I said, the theta, it's going to eat into your profits if it starts to consolidate. So you always want to make sure that you have some type of breakout. You should have your lines drawn up and it should be a level break before you even jump into something like this. These are options that expire the same day. If you don't know what you're doing, you'll get crushed. All right. So now let's go ahead and change the expiration date. So we're going to go from a day trading style option or an ODT option, which you trade the same day because it expires the same day. And let's say we go with a swing. All right. So let's say we go to May 20th. Now, if we go to May 20th and we choose, let's say we go with the same option, right? So we're going to get a 520 option. So we click on it and we go ahead and we scroll up. We'll see here now that delta is 56, but look at the theta. It's only 29 cents. Bing, bing. Good. Which means this has some time to run. You can actually go through some consolidation with this and you'll still be profitable. Obviously, as it gets closer to the expiration date, which is 520, the theta is also going to increase. That you should know. Now, the more people that buy into your option, this particular option, the delta will also increase. So it's it's a double-edged sword. But me personally, if I was a beginner and I'm just starting out, I wouldn't even touch the options that expire the same day. The ODT options, I wouldn't, unless you're really good at like charting. But swings, you could buy the swings. The delta is decent. This is a decent delta. It's not like, super high, but it's decent. This is something that I look for. Let's look at the open interest and the volume. The volume it's a 4-digit volume. It's 5,000. So that meets my requirement. And then the open interest is also 4 digits. So pay attention to volume. This is for beginners. Pay attention for volume. Pay attention to open interest. Pay attention to the delta because that's what you're going to get paid on. And pay attention to the theta because that's what's going to take away your money. All right. So you definitely want to pay attention to that. Now, if you want to go ahead and let's say you want to go ahead now and purchase, a put, it's the same thing. You would just change here from buy, call. So buy and call, you would just change put. So click this. And now what you're doing is you're betting that the price will go down. All right. So let's say we scroll down here. Right now, the price is $520.69. Let's say we're going to bet that it's going to go to, let's say we're going to bet that it's going to go to 519. All right. So if we go ahead and we select that, you'll see here the volume is 3 digits. No good. 3 digits here. No good. Now, bear in mind, I am doing this when the market's closed. So, this could change if you're doing in a real life situation when the market is open. This is like, I'm doing this like at 12 midnight. The delta is 39, not the best, but I could work with it. And the theta is 24. So this is decent too. This expires on May 20th. So like I said, you do have some time. And if you purchase this, this would be considered a swing trade versus a day trade. So let's go back now, and we're going to go back up, and we're going to select today's date, May 14th, right? So now this is going to be a day trade because this option expires the same day. So we scroll down and we look for the same 519 strike. So we click here. When we scroll down, we'll see now that the delta is 31, but look at the volume. It has crazy volume, 40,000, and the open interest is 3,000, right? The theta, however, look at this, it's 86. So it's a lot higher the closer you get to the expiration date. Now, these options that expire the same day, usually once you get to like the start of the afternoon session, which is around 2 p.m., you want to get out. It starts going crazy at that point. And, you could lose your money so quickly. Like I tell people all the time, when stocks are going up, it takes the stairs. But when it's going down, man, it jumps out the window. So you want to be careful when you are playing these kind of options. This is a put, however, so if it does jump out the window, that'll be good for us. But that's just to give you guys an idea of exactly how you would trade options on Robinhood and paying attention to these key factors. Like I said, when you click on the option, pay attention to your volume, pay attention to your open interest, your delta, and your theta. All right, so now let's switch back to calls. And we're going to go back and we're going to look at a swing. So we're going to go back to the 20th for the expiration date. And let's say we're banking that this is going to go to, the price is going to go to 521. So we're going to look at the 521 strike. So if we scroll down, another thing that I want to show you guys, when you click on the option, right, you see we have our volume here. We have our open interest. We have our delta, which is 52. We have our theta, which is 29. But you see this little button here, add to watch list. If you double click on that, right, what it's going to do is it's going to add this option to your watch list. And then when this option starts to move, it will actually give you a notification on your phone if you have the Robinhood app on your phone. And I'm pretty sure everybody does, but obviously I'm working on a computer. So what will happen is you'll get a notification telling you, hey, the option is up. Usually it'll give you a notification right around when it's up or down like 20%. So I can't tell you how many times I've used this just to remind me of a particular option, hop right in for a quick 5-6 minutes, made some money, and get out. All right, so this is also very critical. Now, if we go back up here, right, and we click on the option just to close the detail page, say we want to go ahead and purchase this now, right? We would go ahead and click the plus sign, and you're going to see that it adds up over here on the right. It tells you what your max loss is going to be. So the contract is 362, right? $3.62. But remember, with options, you're multiplying whatever the price you see here, you're multiplying by 100. So the actual max loss is $362.03. Now the 3 cents is like a regulatory fee. All right. Now it says time in force, which is good for today. And if you click here, you have different options. Good till cancel. Just leave it for good till today. All right. Now we scroll down here. It kind of gives you like a little idea of what could potentially happen. So this is where your max loss would be. But let's say it gets to this point. If it goes to 520, let's say it goes to 526, you're up $213. If it goes to 528, you're up $413. If it goes to 530, you're up $600, as you could see there. So, and this is not unrealistic, because if you go back, and I'll show you this right now. You go back and you look at the 52-week high. The 52-week high so far is $524. And as you guys could see, what was that? It was up like $400 if it goes to 524, So that's pretty much how you would trade options on Robinhood. Obviously, you would need to learn the charts. That's a whole nother video and that's really intricate. But yeah, that's pretty much it. If you have any questions or there's something that you guys want me to cover specifically, you could go ahead and just leave that in the comments. Don't forget to go ahead and like the video and share it with a family member or a friend. And if you like videos like this, I make new videos every day. So please go ahead and subscribe. All right. Thanks again for watching the video, guys. I really do appreciate it. Stay safe and y'all have a blessed day. Peace.